Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, January the 23rd. The year's 2024. Let's talk trading. Trading with Walmal, TROHL reverse. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, a few traders wanted me to, go over that new indicator I've been working on, the TROHL reverse. And so I've got it as a multimeter and I've got it as a history. And all I'm looking for is if price makes a higher high on the current bar than the previous bar, but it closes below the high of the previous bar, I want to go short. And then to go long, I want the current bar to make a lower low, but to close above the low of the previous bar. And outside bars don't count.
Yeah, because that's a confused signal, isn't it?
Yeah. So right now, we're at a situation where we should get a reverse if this candle closes below the previous M1, candle one's high. It looks like it's going to. So you might be a little late to the party.
Yeah, I went short at 16.8.
In the flip-flop box?
Yes, sir.
Yeah. So
it also turned the indicator to magenta.
yeah. And also one other thing though, you don't get a signal on the outside bar because you have a higher high and a lower low. So that's why no signal. But you see we've got a signal on M5. So made a higher high, but you see it closed below.
Oh, come on, fella. I need you to drop a little bit more and I can get out. There we go. Today's a little bit different. Yesterday I was sitting around waiting for a trade to show up. Now I'm sitting around waiting for my trade to fully develop. But once again, all I do is, it seems like all I do is sit around all day.
Well, trading's about 99% waiting.
Yep. I'm thinking about getting out here because I can get out with about 2.6 pips. And we're hitting some, if you look to the left on 1 minute candles, we're in an area of confusion down here. If it breaks this area, I'll stay. If it doesn't break this area, I'm gone. So I'm waiting for the end of this candle, which is about 10 seconds. So it's got 10 seconds to make up its mind what it's going to do. 7 seconds.
You're right there.
I'm right at the edge. I'm out, which is probably a mistake anyway. But I got 3.2, so I can't complain about it. Now what it'll do is it's going to run all the way down, turn them 30 red, and make me mad.
Well, a couple of the things that I also have on my chart, I've got the old TRO dynamic fibs SR, but I turned off all of the fibs except for the 50% line because that's kind of a target line.
Right.
So when I'm in a trade, that's a target that I can go for.
And it's, it's funny that you say that because, I say this to you all the time, and I know I've said it on videos in the past as well. When I see a big return bar someplace, I say go to the midpoint, and at that point make a decision, just sort of like what I just did there. Make a decision what you're going to do at that midpoint. It doesn't mean I put a hard, fast, TP at the midpoint. It doesn't mean that I, just get out there at that point. But I know that at that point, when price gets to that area, I need to make a decision whether or not I'm going to go and sort of like You know, like the Kenny Rogers song, you know, the gambler. I gotta know, you know, gotta know when to hold them, gotta know when to fold them, and you know, and I make a decision at that midpoint. And the reason why I bring that up is because your idea of the fib with showing the 50% level, I think is really smart because for whatever reason, people, and that's who we're dealing with when we're trading against people. You know, they may not even be doing it, you know, consciously, but they make decisions at that 50% level for whatever reason, and they either fold to get out, or they go and say, oh, look at that, we've made it halfway, I'm going to jump in, but it causes a lot of indecision at that point, and that's the reason why I get out, because it's sort of like I've made money. Why do I want to sit here during an indecision point? You know, it's sort of like, in software development, I worked in that for a while, and the thing is, what do you call a piece of software that just first comes out there? I know you work in that arena as well, but what do you call a brand new piece of software? You call it bleeding edge software, right? Because there are going to be some people who are going to get cut up on it because it's not going to work, not going to do exactly what you need it to do. But at the same time, it turns out if it actually works, you can do really well with it and put yourself ahead of your competition or whatever you're trying to go and get, whatever job you're trying to get taken care of. And if you look here, I bring this all up, because if you would draw a fib, from the bottom of last hour to the top up here, we got to, let's see, roughly, we missed hitting the actual midpoint of this by 8 points. Not 8 pips, but 8 points. And it just seems to happen over and over and over again. And so it's this type of thing where I don't know if you can necessarily build a system around it, but what you can do is certainly have that in your toolbox of, things to keep in the back of your mind. Okay, we've already, gone down halfway. It's going to make a decision whether or not it's going to go all the way down, or if it's going to, run or it's going to go and reject it and come back up to the other side. And so, I'm just saying these things just that, we as traders can sit there and say, keep your eyes open, trade what's on the charts, right?
Right. Now, one of the other indicators I have is the TROHL indicator. I'll just bring the list up here. And some of them I might have in there, like the flip-flop box, that one's turned off at the moment. So, and the reason I have this is because if you notice bar 3, it came up through that low, and the low, that line is blue, so it means if it's coming up to it, you buy. And then here on the from this one right here, when this bar 1 hit this high from bar 3 and came down, if I remember correctly, it gave at least a pip, if not more. And when I do those trades, that's all I'm looking for, to get that quick pip, unless it just keeps going. And sometimes you get lucky and, you see, but it might run 2 or 3 pips real quick. So I don't short here, because that's not the trade. Yeah. The trade's the other way.
I did short there because I shorted on a
flip-flop
box.
Right.
And I'm out again because I hit that exact same spot again. And I picked up I got 2.8 on this one.
And now we're right at the midpoint.
Yep.
So this is why I have those dots. The other one was too many dots on the chart.
You got dotted out.
Yeah.
And that can happen, and it's, we got to be very conscious about that. We wind up having so much junk on the chart sometimes, and everything that you have there may be useful, but if it's all there, you can't process it. So you got to make a decision. Okay, this is what I'm going to do.
Yeah. Now, one thing here you can see, you got a long signal here, which right from the get-go it didn't pay off. So if you had jumped in early, you would have gotten burned. And then
Right. So what is your rule on that in terms of when do you jump in? Do you jump in right at the beginning of it, or do you wait for the candles, for instance, to go green for you?
you know that I haven't really determined that because I it's more of a, I guess I haven't put together a method around it. It's more of,
Right.
if it's near the bottom, I'll do one thing. If it's near the top of this dynamic support channel, I'll do something different. So,
Okay.
and like I said, I really haven't put anything around it because like this is new, and
It's brand new.
yeah, it's just a trigger right now. So it's like, okay, here's the conditions, but the question is, well, I guess the way to look at it is, if price is making new highs, and then it makes this highest high, and then it starts to make lower lows, chances are you're in the around the midpoint. That's the no man's land for entering a trade, basically. For me, I want to
Right.
be either close up to the top to the red dots or down the bottom to the blue dots to make that decision. And so now you've got a new dynamic support level right here, but I probably look for that to push down. And then, looking at M30, that's red. So it's like, I'm not really looking for longs here. I'm looking for shorts somewhere from up in this area. And one
Right.
thing about this, it really will slow down your trading because you get, I don't know, maybe 5 or 10 signals an hour when you're on M1, as opposed to getting, 20 or 30.
Right. Yeah. And the thing is, I think that's part of the reason why I'll talk about flip flops for a second here, and that is that's part of the reason I have a couple of those rules in place with flip flop boxes, because you could almost some hours say you get a trade every minute, right? Well, it's not really true, but it seems that way sometimes. And but by going and making sure that you're not trading against, let's say, the M30, or you want to be in the direction of M5, but putting some type of qualifiers on it, it forces you to slow down. And part of the reason why I think correct me if I'm wrong, but part of the reason why you want to slow down is it gives you time to actually look at the chart and see what you see. Sometimes, it's good to go and take a trade because oh, here's the signal, take the signal, right? That's a good thing to do. But sometimes what happens is the signal is not a clear signal. It's somehow it's clouded with something else, and because you're just jumping in so fast, what happens is sometimes you can wind up taking a signal that maybe you shouldn't have taken a signal. And so, in other words, going and stepping in front of a train or a bulldozer, or whatever analogy you want to go and use, And so for me, that's why that's important for me, especially for someone like me who's very, very impulsive in nature. So I want to go and make sure I've got things that, slow me down, say, whoa, horsey, you need to go and just wait a minute here.
Yeah, and the other thing, what I just did really quick was I just scrunched the chart so I can get as much data on. So you get one picture, you see a whole different perspective than if you're only looking, at a wide chart. You don't realize where you are in the big picture. So sometimes you either scrunch the chart, or maybe you move up a couple of time frames, and it'll just give you a much better overall view of what's going
Right.
on. And you know what, fellow traders? The fastest
We're
15
out of
minutes in
time.
trading is over. So let me know if you have any questions, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.